Good morning everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 6th of September. It is non-farm payrolls Friday, and what we have seen in the last few days really is an improvement in market sentiment, and that really has driven markets into a change of direction. Gold yesterday had a sharp fall away. The big move came on the back of this ISM data that for the non-manufacturing sector, which really surprised to the upside and just suggested that the consumers is still holding up well, and that had an impact whereby treasury yields pulled higher. You can see the 10-year sharply higher at 2-week highs there, and also the 2-year as well. That also helped to maintain this this positive 2-to-10 spread on the yield curve. And what we've seen is the dollar, which has been sort of flying around a little bit. It pulled back into a basis of support. It's still in this uptrend, but you can see the positive risk sentiment coming through with the Chinese yuan, which has strengthened. And just generally speaking, positive risk appetite tends to be positive also for copper. Look at that run higher on copper, reflecting again positive risk appetite. You've got the VIX volatility again falling away. We've got equity markets which have moved sharply higher. The S&P 500 trading at 1-month highs and breaking out to the upside above that 29.43 level, and a significant move higher there. So really, generally speaking, what we've seen is an improvement in risk appetite, and that has sort of been maintained into today's session, where we've seen S&P 500 futures another 0.3% higher. You saw Asian markets higher, and yeah, just generally speaking, markets looking much more positive in sentiment. And obviously that's weighed on gold, also weighed on the outlook for the Japanese yen, which again continues to slip back a little bit, as does the Swiss franc. So okay, it is non-farm payrolls Friday today, so this now becomes the focus. Can this improvement in data, or the improvement that we saw certainly through the ISM numbers yesterday, can that also be reflected through the labour market? Well, we saw the ADP employment stats on yesterday coming in better than expected. Now we're seeing payrolls expectation of 158 down from 164 last month. Is that now going to be triggering the potential for an upside surprise on that headline payrolls number? That could be certainly the risk. We're also looking out for average hourly earnings, expected to be 0.3% growth on the month, but that would be a drag back to 3.1% on the average hourly earnings year-on-year numbers. Strong earnings growth would be a positive, certainly for the US economy, certainly suggesting that the consumer remains in a positive and robust position, and that would help to sort of sustain this improvement in risk appetite. So non-farm payrolls are the key factor of today's session, but we do also have Fed Chair Powell speaking at 5:30 this evening, and it'll be very interesting to see how Powell comes across there. So let's take me to my chart today, which is sterling yen. Now we've had a sharp increase in sterling, but also that correction on the yen, that's coupled basically together to make sterling yen sharply higher, breaking out to a 1-month high above that 130.65 level of resistance that had been the basis of resistance throughout August. That's completed a base pattern, a pretty good base pattern as well, double bottom base there, which actually implies around about 400 or so of pips of recovery. So it means that the implied target is around about this sort of 134 to 135 area, and again that brings you back into the 38.2% fib level, and the market at the moment is consolidating around this 23.6% fib level. So closing clear of that 23.6% fib level would really help to engender this recovery phase, this momentum that we're seeing built up. Look at that RSI 57, that is a 4-month high. You've seen the MACD lines accelerate higher, the stochastics also. So this certainly looks like it's a recovery that is in process now. So you'd be looking at buying into weakness. That neckline that neckline breakout becomes supportive now. And you can see on the hourly chart, 130 big figure. If I come out here, you can see that was an old basis of resistance, which has become a pivot line actually, and there was a little mini pullback yesterday on the breakout, became supportive. So 130 to 130.65 is a basis of support now to buy into weakness for this sterling yen, and I think that's where we're looking at for the recovery. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos on YouTube, but also go to our website where we do run a non-farm payrolls webinar today, and you can sign up there on our website. Thank you very much.